Here's a business almost nobody talks about on YouTube, and it's already a multi-billion-dollar industry. You look at a company's website, figure out what kind of business it actually is, and assign it a code. That's it. No inventory. No storefront. No employees required to start. And companies pay real money for this, sometimes $1 or $2 per business, sometimes thousands a month on retainer. Realistic income in your first 6 months, working part-time from a laptop. Somewhere between $1,000 and $5,000 a month once you land your first couple of clients. Not overnight riches. But is it actually profitable? Let's break down the real numbers before you decide. This is for people who are detail-oriented, comfortable doing research, and okay with cold outreach to businesses, because this is a B2B service, not a consumer product. It's a strong fit if you have any background in finance, compliance, data analysis, or even just really enjoy organizing messy information into clean categories. It is not for you if you hate sales conversations, want a fully passive income stream, or expect to get paid without ever talking to a client. So what exactly is this business? Every business in the U.S. gets classified under a system called NAICS, the North American Industry Classification System. It's the government's way of sorting companies into industries for statistics and reporting. NAICS was adopted in 1997 to replace the older standard industrial classification system, and it's the standard used by federal statistical agencies to classify business establishments. But here's the catch. There's no single government agency that automatically assigns these codes to every company, and outside of the Census Bureau's own surveys, businesses often have to self-report or get classified by private firms. That gap is where you come in. Payment processors need to know a merchant's correct code before they can approve them. Compliance software companies need human review layered on top of their AI to catch mistakes. Lenders need accurate codes on loan applications. You research the company's website, confirm what they actually do, and assign the right classification. Clients pay you per project, per batch of companies, or on a monthly retainer. U.S. Census Bureau Drexel. Now let's talk demand, because this isn't a guess. The global Know Your Business verification market was valued around $4.8 billion in 2024, and industry estimates suggest it could reach roughly $19 billion by 2033, growing at a double-digit rate every year. Separately, Juniper Research found that spend on Know Your Customer and Know Your Business systems by non-financial companies is set to grow 140% over 5 years, from $9.2 billion in 2024. That growth is being driven by regulation. Banks, fintechs, and payment platforms are legally required to verify who they're doing business with, and classification is a core part of that. Bigger players are automating this with AI, but AI still gets it wrong on edge cases, and that's exactly why human review services are in demand. Growth Market reports Juniper Research. Let's get into the money, what it actually costs to start this. Category minimum cost equipment, laptop, if you don't already have one, $0, $600 licenses/LLC registration $100, $300 business insurance, basic liability, $30, $60 per month website plus CRM setup $500, $1, 200 data tools, industry lookup, company research access, $50, $150 per month marketing, LinkedIn, outreach tools, $100, $250 per month miscellaneous, invoicing software, domain, contingency, $100, $200 total minimum investment $1, $200, $2,800. Here's where that money actually goes. The LLC protects you legally and makes you look like a real company to compliance-focused clients. This matters more here than in most side hustles, since your clients are risk-averse by nature. Your website and CRM aren't optional decoration. They're how you look credible enough to land B2B contracts, and how you track leads, projects, and deadlines without things slipping through the cracks. Data tools are what let you actually verify company details efficiently instead of manually digging through 10 tabs per business. Marketing spend goes toward outreach tools like cold email platforms and LinkedIn Sales Navigator, since this business lives and dies on your ability to reach the right decision-makers. Monthly operating costs once you're running typically land between $500 and $1,000, mostly software subscriptions, outreach tools, and insurance. Compare that to almost any brick-and-mortar business and it's a fraction of the overhead. On income, conservatively, with one small retainer client, expect $1,000 to $1,500 a month in your first quarter. Realistically, with 3 to 5 clients or one steady per record contract, $3,000 to $8,000 a month becomes achievable within 6 to 12 months. Optimistically, landing a mid-size fintech or compliance vendor retainer can push you to $10,000 to $20,000 a month, though that usually means you've hired subcontractors to keep up. Profit margins here are unusually good for a service business, 60 to 80% if you're doing the work yourself, dropping to 30 to 50% once you're paying a small team to scale. Break-even is fast on the cost side, often within 1 to 3 months of landing your first paying client. The harder part isn't recovering your investment, it's the time it takes to land that first client in the first place, which can realistically take 1 to 3 months of outreach. Now, the mistakes people make. Number 1. Treating this like generic data entry and pricing it that way, when compliance-grade classification work commands premium rates. Number 2. Trying to serve every industry at once instead of picking a lane, like payment processor support or SBA lending documentation. Number 3. Skipping quality control, because one wrong classification on a high-risk merchant category can cost a client real money and cost you the contract. And number 4. Assuming AI will replace this before you even start. It won't eliminate the need for human review anytime soon, it just changes what the human review looks like. Where's the opportunity? Small and mid-size fintechs and embedded finance companies can't afford enterprise-grade compliance software but still legally need accurate classification. That's an underserved niche. Same with SBA loan brokers and franchise directories. Your differentiation is speed, accuracy, and specializing in the messy edge cases automated systems get wrong. Adult content-adjacent businesses, CBD companies, gambling-adjacent platforms, categories where card networks require careful, defensible coding. Here's how you actually start. First, learn the systems, NAICS, SIC, and merchant category codes, using free government resources. Second, pick one niche to target rather than everyone. Third, build a sample classification report as a portfolio piece. Fourth, set up your LLC, a simple website, and a CRM. Fifth, start outreach on LinkedIn directly to compliance and onboarding managers at fintechs and payment processors. Sixth, offer a small paid pilot. Classify 200 companies for a few $100s to prove your accuracy. Seventh, turn that pilot into a retainer and ask for a referral. On tools, your website and CRM matter more than people expect here, because this is a trust-based B2B sale, and a sloppy web presence kills credibility with compliance-minded buyers before you even get a meeting. This is exactly the kind of setup where it makes sense to bring in a partner rather than hack something together. SoftAngles builds and manages websites and CRM systems specifically for service businesses like this one, so you can focus on the actual classification work instead of fighting with a website builder. You can book a free consultation and estimate with them, and the link is in the description. For marketing, online, LinkedIn outreach and direct cold email to compliance and risk teams work best. Offline, fintech and payments meetups are surprisingly good for warm introductions. On a low budget, lean entirely on LinkedIn organic posts and direct messages plus referrals from your first 2 or 3 happy clients. To scale, build a small trained team of classifiers and consider becoming a white label partner for larger KYB software vendors who need overflow capacity. The risks are real. Sales cycles with compliance-focused companies are slow and cautious. There's genuine competition from large data providers. And misclassification carries real liability, so accuracy has to be non-negotiable. Do specialize, do build a quality checklist, do price based on value delivered, not just per record. Don't treat this as passive income, don't skip contracts and data handling agreements, and don't spread yourself across too many industries at once. So, the final verdict, is it worth starting? If you're detail-oriented, don't mind B2B outreach, and want a genuinely low-overhead service business with real, documented market demand behind it, yes. It's a strong fit for former analysts, compliance professionals, or researchers looking for a side income that can scale. If you want fast money with zero client interaction, skip this one, it's not that. If this kind of realistic business breakdown is useful to you, subscribe for more of these, because I go through a new business model every episode with real numbers, not hype. And if you're serious about starting this and need a website or CRM built properly from day one, book a free consultation with SoftAngles. The link's in the description below.